In this video, Max Ganick from our prop desk in New York City shares with the University of Michigan Investment Club what it's really like to be a prop trader. Hi, I'm Mike Bellafiore, co-founder of S&B Capital, and we're a proprietary trading firm located in Midtown Manhattan. And I'm also the author of the trading classic, One Good Trade, and the playbook. Max is already one of the best traders at our prop firm in only his second year of trading. Don't miss the opportunity to hear from a young trader just crushing the markets. Let's get to work on sharing Max's insights from his experience on our prop desk in New York City on what it's really like to be a prop trader.
Really appreciate you taking out the time. And if you want to just introduce yourself and SMB a little bit to start us off, that'd be great.
Absolutely. I'm Max. I graduated from Michigan in 2019. I was also a part of MII for all 4 years at school. And then after graduation, I joined SMB in September of 2019, where I started the, just training class here, so to speak, or just the portion of the job. And then I went live in I think it was January of 2020, and since then I've been a live trader here, so going on 2 years almost. As far as SMB goes, we're a prop trading firm. Basically, like what that means is that they hire people like me to then come in and trade the firm's money. And then as we grow, we get more buying power and more risk. And as a, and just like the way that it works on my end is that basically I get a split of whatever, I bring in for the firm. And, as a, we can basically just like trade whatever like we want, stock-wise. And then as you grow with the firm, then you can also start doing options and futures if that fits in with your strategies. Part of being a prop trading firm is that you have access to so many different resources, such as technology, as well as also senior traders to learn from, as well as trading with other traders on joint trading accounts, and then also being put on teams as well. I'm sure that there'll be other questions as well on kind of like what is prop trading, and I'm more than fine going into detail then.
Yeah, actually the first question is, what is prop trading? A lot of the people I've spoken to in the club and before this are not very familiar with it.
Mm-hmm.
It's not a very traditional path from MII. So if you could just go into a little bit of detail about what it is that you do and what prop trading is overall.
Sure. So I would say that the biggest difference between prop trading and then sales and trading is that in sales and trading, you are executing on behalf of your client. So it's not going to be your own opinion. Prop trading, I am putting on all of my ideas. There's no one saying to me what I have to trade. They're not saying, oh, please do this for us. This is all my trades, my thesis. And if I'm right, I make money. If I'm wrong, I lose. I don't get paid. That's basically just how that works. And then, and the beauty of that is that you can grow as fast as you want. I mean, if you do well, there's no limit. It is a true meritocracy here. And I think that's kind of one thing as to why this job is so appealing, is that there's no cap on what your success is. There's no one saying that you can't make $1 million in your first or second year. You just got to prove yourself, and you just got to put up the stats. I think that's one of the biggest attractions, is that in, let's say, a sales and trading role or a more typical finance role, it's you have to stay at this level for 2 years, then you move on. The pay structure is kind of structured, and also just my day as well. I mean, overall, I can work as little or as much as I want. I can trade all hours that the market is open. I can trade the first 20 minutes and be done. I mean, there's no one here that is saying you must sit at your desk the whole day, and there's no one here stopping me from doing that if I see that that's the best path for me. I think that really having a sense of entrepreneurship is key for this job. I mean, like, you are like your own boss basically. Like, this is your business. Like, trading is my business, and the way that I express that is obviously with my trades. And yeah, I mean, it's kind of like a basically rundown, I would say.
And yeah, the next like kind of two questions were, why'd you choose to go into prop trading, which you kind of answered a little bit, but also how'd you get interested in prop trading, coming from an environment like Michigan, MII, where it's not a very traditional path, a lot of people in banking, private equity. Where'd that interest come from?
Absolutely. So I started trading on my own before coming to Michigan. So I was always interested in just, you know, putting on like my own trades for my PA, stocks and options. And I think that because I wanted to try and find a job that emulated that as much as possible, I thought at first that was like sales and trading. But after going through that experience at Morgan Stanley, I realized that was just like not for me. I did not really find it that interesting for what my desires were, to be kind of executing on behalf of a client and doing kind of more of that you know, like structured role. So I basically found prop trading, you know, I mean, like something where I could follow through on what I was doing before school, something where I knew that I was going to be in full control of my own destiny, and also, you know, like something where I could fully express my own ideas. I think that like one of the beauties of prop trading is that, you know, I mean, like, it's a constant, I mean, like, feedback mechanism. You know, it's a really good feeling when you put on a trade based on your own like thesis and research and back testing, or you know, just like whatever like that like might be, and you do well. And it's also a very easy way to see where you're screwing up and doing wrong, because then like you lose money. So it's a very straightforward way of like determining success, and something that you can really build on and improve in yourself. And I feel like that really is prop trading, because there's really no other job, I think, in finance where you are in full control of what you do. The only thing that they control is your risk and buying power. But like besides that, it's all you.
And getting a little bit more granular into the trading itself, can you talk us through a little bit about how to develop a trading strategy, or maybe what your strategy is a little bit, and what kinds of things you trade?
Absolutely. So I think that you know, I mean, when you like start out, you try like many different things. There's like very short-term trading, which can be like minute to minute trading. There's more intraday, like longer term, so like a long-term intraday trade could be something where you're buying near the open, selling near the close, because you have like some like thesis for why a stock will do something throughout the day. There's so many other strategies, and like one way that like you can like learn, and I think that's one of the benefits of being at a firm, is that like you learn from senior traders. So like when you're put onto a team, you are learning from your mentor, and you're seeing what kinds of trades they're doing. You see why they're doing it. And I would say that when you come into a prop trading role, it's very different than what you might see on Twitter. It's not like the same kind of style trade. It's not like you see two triangles, you buy the breakout, and that's that. It's not, you know, I mean, like, that's not like what like we're doing here. It's a lot more advanced, and you know, there's, you know, I mean, like, there's a reason why most traders here like make money, and why the firm is so like successful. And by being able to be in that environment, then you can develop like your own, you know, just like strategies, and you can develop who you are, you know, and just like develop like your business as being a trader.
And then you touched a little bit about having theses for what stocks are going to do throughout the day. Can you talk a little bit about how you kind of develop those theses, and then what research you do?
Sure, absolutely. So I mean, like, for me, most stuff is not going to be a fundamental thesis. It's going to be based on price action. So you know what that means, like, for me, is based on volume, based on price levels, how a stock is interacting at certain levels, who is in full control. So for example, if let's say you have a stock where there's so many people like fighting it and trying to short it, or basically bet that the stock is going to go down, and they're basically betting against a certain level, right? If it starts to reclaim that level, so now like that can be a thesis. Like, you're using price and you're using volume to now create a thesis that, you know, like that now like the stock will go higher, because now all those people are now you know, on the wrong side. A different way could be understanding kind of like the actual structure of a stock, right? So there's a thing called float, which is basically how many shares is there that is available to be traded. I mean, like, you know, so like there are plenty of strategies out there where that will impact kind of what your thesis is, because obviously the more shares that there are, right, you know, there's more supply, and therefore it takes the stock, you know, a lot more energy to move just because there's just like so many more shares. Whereas on the flip side, every day like there's like just like stocks in play that have a very small float, and therefore if you can understand price action volume, then that could very much determine your bias and create a very good trade for you. Other sorts of things are maybe more on the fundamental side, but also are price action. So for example, if there's earnings trades, right, you might understand some sort of a like fundamental view, and therefore you could bring that in, and then if you combine kind of just a understanding of just reading the stock and just seeing how like once again like price is interacting, and that's a way that you kind of like mesh those. There's also like strategies based on like what we would call overextension or something, where you think a stock has moved like too much, and then like you have like your own way on kind of like thinking that, and then you can have different ways of basically doing a mean reversion strategy, and like everyone has like their own way for doing that, and then you could build that out as you're here. But yeah, I mean, like there's so many strategies, and I'm sure that there's plenty more that I just like don't do or just am not like well versed in.
Thank you for that. And I know last time we spoke, I think Mike mentioned crypto.
Mm-hmm.
So could you mention a little bit about the differences when you're trading a stock versus trading crypto, and where you see the industry going as far as trading crypto?
Yeah, so I'm not a very experienced crypto trader. I will say that one of the beauties of crypto is that there is a lot of vol. I mean, it's constantly moving. That creates opportunity for you as a trader. There's plenty of liquidity. So like right now, I'm personally just on crypto futures, so Bitcoin and ETH, and then there's some crypto ETFs. But as the crypto desk gets developed, and like that's going to be an incredible opportunity. There are plenty of inefficiencies as well as just pure like momentum trades that crypto offers, and I can't speak to like that many strategies since I'm not too well versed in it. But the opportunity to trade something with range and volume and liquidity is something that is truly exciting.
Sweet, thank you. And kind of moving a little bit out of the trading talk specifically.
Yeah.
I know you already mentioned that your hours are kind of up to you, but what does a typical day look like for you? I guess from like start to finish and the things you look at and do.
Yeah, I mean, like there's basically been two parts to this year for me. When there was a whole AMC GameStop fiasco, right? I was up at 4 in the morning every day, basically nonstop traded until 8 p.m. Then things quieted down, and I would wake up at, let's say, 7:45 and be at the office at 8:15. Either way, I mean, like, your hours are definitely kind of determined by also the market volatility and the opportunity. I do try to just like work out, I mean like midday, just to be like, a mental break. So like, let's say around 12-ish, give or take, go work out, grab lunch, come back, and then start to discuss swings for a overnight position. And then after hours, sometimes there's trades, so that's between 4 and 8 p.m. Usually, that's just like monitoring stuff, like monitoring how things are reacting after it closes, how our futures, and just kind of like finalizing things up. And then like the market closes at 8. For like the most part, I usually go to bed pretty early, just like constantly, just like, the nonstop grind throughout the day really does like knock you out. So like, usually by 10 o'clock, I'm just going to bed. And yeah, on an average day, I would say probably up by 7. Intense hours are between 9 and 4, and you can take out, let's say, 3 hours in the middle of the day when you're not really doing that much. Maybe you have a little bit of like review after hours. Some people like don't trade pre-market and after hours. That's me. That it doesn't have to be you. It might not fit into like your strategy, but the average person, I would say, is definitely there at least 1 hour before the open, doing some sort of prep, and then at least like 30 minutes after 4, doing some sort of review.
And last time we spoke a little bit about money.
Mm-hmm.
So can you talk a little bit about, the differences in maybe compensation and trading versus maybe in a more, I guess, traditional field for people like us in investment banking, and just like things like how much are you up on the year?
Things start out definitely at a lower level than probably what most people like would want. I mean, like you might be starting out only with a stop, or basically how much that you can like risk per day of $1,000 or a few $1,000s, and maybe like you make 5-10K in a month, but after splitting fees, like that's maybe a 1 or 2,000 like take home. So that's small, but then as you grow, I mean, the numbers could be quite real. So like my stop started out $500 when I got here, and now it's 350,000. So average month for me, good month, 300 to like 500K. This week was my best week, and I made 500 grand. I'm up around like 2 million this year. And that's great, and I'm really excited about that. But there are traders here that made 20 million last year. There are traders here that will probably make 30 or 40 million this year, right? Those are goals, and the one thing that I think is part of the beauty of the job is that like you're always trying to become a better version of yourself, and you're always trying to improve, and there's always that kind of competitive nature to this job, and that's kind of what keeps pushing you to want to do more and more. I think that kind of speaks to one of the points that I was saying about like the structure of, let's say, doing a sales and trading versus this job, is that you're going there and it's like a structured, okay, like you're gonna get 85 base plus 30-40 bonus, right? And then like next year it's a little bit more. There's something just that really excites you every day about knowing that you're going into the office and you could do something really special. You are in full control of how well you do. It's your mind, it's your actions, it's your research and thesis, right? And having that drive and just like understanding that, I think can create a really exciting work atmosphere where every day you want to go work. There's not a single day, if there's some opportunity, that like you're not there hungry and wanting to do something. Not every day is fun, and there are many days, if not most days, that are very frustrating, but they can also be very satisfying to really see that success, like something where you look back at the end of the week and be like, wow, that was a record week, that felt amazing, I put in the work, all these hours really is now proven that what I'm doing is right, and I'm glad that I can see that for myself.
And then as far as trading goes, versus things like banking or private equity, how do you view it as a longer term career? Do you think it's something a little bit more short term in nature, or do you think you'll be doing this for a long time?
So I mean, I think that this is like something that I want to do forever. I think that as the market evolves, the style of trading evolves as well. Like volatility just kind of came back over the last few years. There was a good period of 3 to 5 years, I think, from like 2014 to like 2018-ish, where there was just like not that much movement. There, like there was like not that much craziness. So like that could be a period where, let's say, a strategy of extreme short term goes to more, portfolio style, right? So I think that the exact style could change, and that's going to have to adapt. It could also be that I just get tired and want to do stuff that's more long term, so like more swings over weeks rather than nonstop, action intraday. But I don't think that there's ever going to be a point where I'm not going to want to be involved in markets. It just might be a different way of being involved as I get older.
And then moving a little bit more into the recruiting part, you guys mentioned last time that you guys are, will be looking for interns in the future.
Yeah.
So can you talk a little bit about what you look for in an intern, and kind of, what are you open to underclassmen interns as well?
Absolutely. So as far as the program goes, keep in mind I'm not involved in the decision-making process really, or the actual internship. I just know of what how it works here. So I can definitely give you guys information for who to reach out to. But it's basically a 2-step internship, a junior and then a senior internship. And basically what you'll do is come through and you'll go through the training program, learn, and then just develop your own ideas. I think that what we want to look for, and what I look for as when I try to bring people onto my team, is some sense of just creating original trades, showing that you are working well with the market, that you are interpreting things well, that you're innovative, and that you're basically, providing something new. And I don't really know exactly the best way to explain it besides just showing that you are creating a very good work product with the market, and you can kind of just understand how things work. At least that's going to be me on how I view interns. I guess it's kind of hard for me to say, besides just general terms of students that have a good academic record and who show some sort of a strong passion in the market.
Well, that's all I've got for you. I mean, we can open it up with the rest of the time left. Don't know if we'll take all of it, but if anyone has questions for Max, feel free to raise your hand or just jump in.
Cool, thank you. Yeah, actually going back to, we were talking about the GME and AMC briefly earlier. I had a question in general on pricing these days, because after the emergence of these new players from the rise of finance in pop culture and this, like the rapid spread of ideas on social media and such, do you think that these new players are a permanent feature of markets? And yeah, how do you see that impacting your trading?
So I would say that overall, like Wall Street Bets is definitely something that is here to stay, but it's for two reasons, and one of which I kind of like figured out along the way. Many times we would see just algos come into, or just like come into like the market anytime something would become popular on like Wall Street Bets. So basically, like there would be some algo or that would create like volume and then like create like the opportunity. So like I think that there's like the actual buying power of the people on like Wall Street Bets, and then there are people that are creating the opportunity based upon like what they see on those like social trends. So for example, I'm not sure if you guys were like following CEI. It was this like popular penny stock a few weeks ago that was getting a big like social media pump. And you can just see that anytime that there was some sort of a mention by a particular group, there was for the whole day like an absolute crazy amount of like volume, right? For that day, and it was obvious that whoever like was creating like the algo and then like running it was going based on that information and then putting on some sort of a of a trading program. I think that these things really come and go. They go in waves. Like there's, let's say, a period of like a few months and then it's dead and then it comes back. I think that like the key is really understanding and being able to adapt quickly, right? So like when you see a new wave starting, changing up like your strategy to go along like with that like new trend. But like when you see that things are not working, like you see like, oh, here was some like Wall Street Bets like mentioned, and there's like no volume and it's dead, don't start putting into place those like same strategies. And then I think that's something that as you become more experienced as a trader, you can do that a lot quicker, and that will overall like save you also a lot of money by just not making those mistakes.
Yeah, I just had a question about it's kind of, I guess, about how prop trading firms work. Like, I was wondering where the money comes from. Do you guys put in some of your own money? Do you guys have outside investors? How does that work?
Sure. So it's all the founders' money. It's like their money, and I'm pretty sure that like the way it works is that we use a prime broker, and then like they give us a certain multiple of buying power. So like the founders like put up X, and then our prime broker gives us X times X, and then that is our buying power. And then I'm not sure how it works on the back end, but then as a split, then we get our respective split of those profits.
Yeah, I had a little bit of a different question. It's like when you look at like price times volume as your underlying equation.
Yeah.
What I'm like interested in is like, do you like have any strategies that look at different fund movements in the markets? Because like a lot like the more covered equities, for example, like let's say larger caps are more effective by like, for example, funds moving into them, because like they're more like, for example, stable stocks versus like you can find attrition in like micro caps. So like do your strategies heavily differ based on things like fund flow, or like what is your take on that?
So I would say that just like understanding like the volume and how strong it is actually they're looking at that. So like let's say that there's like some news in the morning, like this stock just got upgraded by X bank, right? And you see a ton of volume. If it's like a large name like Apple, Tesla, just like one of those, it's probably going to be like fund flows. It's not going to be some like random dude buying 40 shares, right? So that's a point where like that's a fund flow, and like that's why like volume is so critical, because like you could have a thesis like, wow, this is an incredible upgrade, like this stock is like has been like dead like for so long. Clearly now people like will see this. If the volume is not there, that's telling you that maybe people don't see that. So like the volume and price will always serve as your confirmation that your thesis is like right or wrong. Because I mean the volume like will also like dictate how far a stock can go, because if there's X like demand that like you can interpret by the volume, then you can basically set your price targets for your trade.
I had a follow-up question on
Sure.
that. How would you end up setting those price targets? Like, do you run, for example, probabilistic models? Do you run more of like regressions based on like past historicals? Like, what exactly like do you do to set those price targets and
So
keep
like
that range for a stop loss?
So for me, right, I will use many times the ATR, which stands for average true range, or basically how much is the stock moving on an average day. If let's say a stock is trading at 2 times RVOL, so basically a stock is trading twice the average daily volume, then a reasonable target is that the stock could do 2 times the average range. Like let's say a stock is like $50, usually moves 2 times per day, starts out the day up $1 and the volume is incredible. You might think that like the stock could potentially move $4 that day because 2 RVOL and then 2 ATR. So if you're buying somewhere at like 51, maybe 54 is a fair target. Stop loss like does not always have to be set in stone. It could just be how you are reading the action. Like let's say like you expected a stock. Let's say it first moved down at the open and then it went back up and started then to just base. If you see like that base start to just like wither away and then start to get weak, maybe it didn't breach lows, but it's just not doing like what you expect. So therefore, like you sell. In terms of like sizing, especially on overnights, usually I will size to kind of a worst case on an overnight, or what is a realistic barring black swan potential, and then there's like many times where I will take home like hedges with options to protect against that, but you might size for a stop loss, but that doesn't mean that you necessarily have to actually hold it to like that stop loss.
In general, when you're also looking like position sizing, like do you consider like, for example, like the overall riskiness of your like not necessarily portfolio, but like your set of trades, and how do you like measure some of those risk parameters? Is
Sure.
like the system.
So like for example, right, EVs have been extremely hot this week. So if I was going to swing long, right, Tesla and Lucid and Ford, obviously that is not just kind of one trade. They're all kind of in like the same basket. So I probably can't put as much risk on each one, knowing that they're probably going to move in the same way. But if I'm going to be in, let's say, a cruise line, a EV, and then Bitcoin, right? Those are obviously very individual trades, and therefore I could potentially size up each one more because I'm not worried about being too heavily involved. As to how I size risk, we all have daily stop, and then we basically assign a % of daily stop to that particular trade. Let's say your stop is $1,000. You want to risk 20% on a swing long overnight. So basically, $200. I will buy the number of shares that basically would put me at a 20% loss at a realistic point of a worst case. It doesn't matter if the stock moves more or is more risky, because I'll just buy less shares because I will size for a wider risk level.
And then how do you like figure out this worst case? Is it more just intuition or?
Well, so like that'll basically be going based on prices like from the day. Like you'll see supply and demand zones. Like where should a stock basically find a supply zone to therefore give you a chance to exit out. If, let's say a stock based between 45 and 50 for 3 weeks, broke out and closed at like 53. It's realistic to expect that the stock will not get below 45 and that it will find some sort of support in that area, right? Or if, let's say, the low of that day was like 51, the odds that that stock is going to gap all the way below like 51 and not find any buyers there to, just like bounce it back up so that you can start, just like selling some shares is slim. Obviously, there's going to be probably points in your career where things go worse than you expect, but also that you don't want to be sized down too much that, you never do well or make money.
What can someone in college who maybe doesn't have enough money in their investment account to do a lot of day trading, what can they do to further their interests a little bit more?
Sure. So, one, there's always just like virtual trading, which obviously is zero cost. Two, I would say that especially with like trading, a lot of, just like my knowledge and then everyone's knowledge comes with just practicing and just kind of getting experience with like the market and just like understanding how stocks react to like certain pieces of news and just really just getting like more like familiar. So it's not as important that like you're trading with like real money, okay? Because it's not like you're gonna start out here any better or any worse by doing making $100 or $1,000 in school. It's more important that you just take the time to get involved with the market, whether that's reading and then just like watching the price action, whether it's actually putting on trades. That could be the worst trades and you lose every single day, but like you're gonna learn from those losing trades. Really, it's just kind of, just getting involved with the market.
Just want to say thank you so much for joining the meeting and taking the time out. But thank you so much.
Hey, go ahead and click our subscribe button so you don't miss any of the videos they're producing for you in the trading community. And please take the time to add your feedback in the comments section for what videos you'd like for us to produce next and what you found helpful from this video. From all of us at SMB, train and trade well.